morning. My name is Pascal Hamelin, CEO of Bonterra Resources. Bonterra Resources is a gold advanced exploration company exploring in northern Quebec. We currently have 3 assets, the Gladiator, Berry, and Moroy deposit, all within the urban Berry camp. We 100% own an operating mill in the heart of the urban Berry camp, the Bachelor Mill. We did a resource estimate in June 2021 with close to 1.3 million ounces of measured indicated resource and 1.8 million ounces of inferred resource. We're continuing to drill. We're doing expansion drilling since June. So far this year, we drilled close to 90,000 meters of drilling, and we're continuing at a rate of about 6,000 meters per month.
Pascal, good to have you back on. Saw you in September, but I thought it's time for a catch up because you've been drilling, hitting good intercepts, high grade, all the kind of stuff that shareholders should like. But you've also done a raise. And the reason I wanted to speak to you today is talk about the timing of that raise, because sometimes it casts a little bit of doubt in people's minds if you do a raise before PEA, which is imminent, comes out. So why did you choose this timing?
Yeah, well, in Canada, we have a fiscal incentive for exploration drilling. It's called flow-through funds. When you do a flow-through financing, you can raise dollars at a premium instead of raising dollar at a discount. We did a flow-through financing back in the spring 2021, but because we were really aggressive on the drilling since April, and for the right reason, we're doing a resource estimate and we're hitting good targets. So we were out of flow-through liability, like we were done the flow-through investment at the end of August. So we were investing, and we're not going to stop the diamond drilling because we're done with the flow-through investment. You're gonna continue drilling. So we were using hard dollars to do exploration drilling, which in Canada it's you can do it. You're going to get funds. You're going to get money back from the government 2-3 years from now. But in the meantime, you're spending hard dollars. So that's why the opportunity was there to raise equity at a premium. So our 30-day average is close to $1, and we raised this flow through at $1.47. That's the reason why. And we're always going to be drilling. So when these are if you're going to do equity financing in the spring 2022 or in the fall 2021, what you look for is the best premium for your equity financing. That's why we did it in September.
Okay, so you've got the raise money at a premium, flow through money. So the timing is kind of unfortunate in some people's eyes, but it makes the most fiscal sense for you to do that. I mean, what if you were raising like hard cash? I mean, you're presuming to be offering a discount of some sort. Is that
typically?
Yeah.
Yeah, typically in our market, especially, I'm not an Equagle or Kirkland Gold. So if you do a hard dollar equity financing, typically the investor will ask for a discount. So there's a negotiation there, but they got the baseball bat, and all you have is a baseball so in a glove. So you give the discount.
Okay. So with the PEA, there's nothing untoward in the sense that there's going to be no surprises there. You're on track. You're fine. Obviously, I'm looking at the drill results. I'm trying to, we'll talk about them in a second here. But I'm not. Is there anything that we need to know about the PEA?
The PEA, it's the first one. Okay, for Gladiator, Berry, Moroy combined with the central mill. There's a lot of scenarios that are being looked at. We're going to make sure, because it's going to be the first one out, we're going to make sure it's right. So I'd rather take a little bit more time and look at all the scenarios than going too fast and then realize a year later or 2 years from now that we took the wrong trail. So this PEA is going to set the trail where we're going next. So I want to make damn sure we're on the right path. And for that, you got to look at all the alternatives, and also try to incorporate the recent drill results too. You know, the PEA is not going to be based on the existing resource. But again, I say that, but if we keep hitting those nice hits, the regulators may, or ourselves, we may have to say, well, we need to redo the resource now. So it's a different scenario. We're not there yet. We're drilling, but we're getting pretty good results. So that may eventually have an impact on the PEA too.
Okay, so again, I just want to understand it, because again, if you say, well, I'm going to delay the PEA off the back of raising money before a PEA.
I didn't say that yet.
Okay, you're not saying that yet.
We're saying we're doing the mine design. We're looking at all the alternatives. We're making sure that all the options are scrutinized. And when it's out, it's going to be the right one.
Okay,
that's
so
what
you're
I'm
not
saying.
Okay. You're not delaying it, but if you have to, it'll be for the right reasons. It's because you're getting results like the press release I've just seen, which is 8 grams over 12 meters near surface. Tell us what you're seeing there, because if you continue to drill and you're seeing numbers like that, for sure you'd want to add that to the resource. Why would you not? So tell us about that drilling that's going on there, first of all, because I want to come back to this PEA question.
So back in between 2008 and 2010, Metanor Resources mined a small open pit, and the grade was good. It was like the head grade to the mill was 2.2 grams. With no mine design, no geology model, they just drill and blast what they saw. There was a pit shell done for the resource of June 2021. And we're drilling outside that pit shell. We're doing step-out drilling since July. And we had results. So right now, we're continuing to drill the extension of the pit shell to the east. We're drilling the portion that can be done on land. And in the winter, we'll be able to continue drilling to further east. Like we have a good 500 meters that we can drill to the east that is undrilled. So we're going to be drilling. We're going to be pretty active there. We're active there presently. If you go to Barry Deposit today, the diamond drill is within 50 meters from the core shack. So like the surface infrastructure at Barry are very close to the potential pit shell. So that's why we're doing a lot of drilling. It may have significant ounces right on surface, like that 12 meters that we hit. It's not near surface, it's on surface. It's at the collar down 12 meters. The first 12 meters of rock, you're in the pit. Okay. And it was 8 grams.
So again, just in terms of, I get that there's an option and you're going to wait and sort of see from the drilling whether you delay it or not. Okay, I get it. You've got no plans. You made that message loud and clear here, but you've got 1.3 million ounces of measured and indicated at the moment. Do you feel that it would be more advantageous if you were able to come back and say, hey, we've redone the resource, the M&I is now 2 million. That becomes more attractive. Or do you say, given that we're not looking to flog this company, sell this company anytime soon, we want to get this thing to a point where we've got some decisions to make of our own, we can crack on now with our 1.24. I mean, where's the kind of, what's the thought process? What are the discussions going on at board level?
Well, we have discussion at that level. You're right, Matt. I got to be careful what I say, but the drilling, no doubt, the drilling is going to have the most significant impact on the future of this company. So that's why you got to be very careful, because people will put a dollar sign value against your asset that you're not fully drilled, and there's a lot of, like, you see the one thing that typically the indicated resource has a lower grade than the inferred resource. In our case, it's like, I'm going to pull numbers here. It's the other way around. The measure indicated resource is higher than the inferred. So you say, well, okay, it's just because of the way the kriging works. You're going to see that means your drill spacing's too wide. and of course, that's why it's inferred, but also not only impacts the answer, it impacts the grade, the having the distance. It's just not categories. So sometimes you have to say, well, maybe I need a little bit more infill drilling to convert inferred into indicated, but also increase the grade, So especially Gladiator. And I mentioned before in this webinar, Gladiator, we're in the permitting process for a decline. Gladiator, it takes forever to drill from surface because it's under a lake. You cannot go and drill 10,000 meter a month or 20,000 meter a month. You need to be underground. So we're in the permitting for a decline over at Glad. That process is going very well. So I could have the permit this winter. Of course, I'm not going to start the decline in the winter. I'm not that mean with my employees. But, summer 2022, we could be in a position to begin the decline. And then it won't take very long that you're going to see our goal for this decline is to go underground and drill. So we're going to be drilling from underground. You're going to have good intercept. You can close the gap from inferred to indicated, but also increase the grade. And grade is king at Gladiator. Gladiator is a high grade narrow vein deposit. So more 10 grams material you confirm, better it is.
Okay, so more drilling. And what's happening there in terms of you're doing, you've got drills on barges. Are they, I guess with the winter season, they'll be coming ashore. Is that in process? Are you there yet?
Yeah. So we're starting to, at night starts to be 2 Celsius, 3 Celsius. So it's time to demob from the barges. So one barge is demob already. The crews are on land. The second barge is being demobbed as we speak. And at the November 1st, both crews are on land drilling Gladiator. But also, we have some regional target. In 2021, we're not supposed to hunt elephants, but for mining, you can look for the big one. So we're putting diamond drill crews in the region to look for the elephant, because let's face it, Windfall, Gladiator, Barry are just the peak of the iceberg. That camp is not drilled. There's geology formation that, the geo have targets everywhere. So you got to give them the tools. You got to give them the opportunity to drill those targets. You cannot always drill Gladiator, Barry. Yeah, that's your bread and butter. But what if there is another one? So you're going to put some, not all your energy, but some energy. So we're going to have one crew doing regional drilling.
Okay.
This winter.
So it's one crew doing that. They're hunting for elephants, not moose. Hunting season's over, right? Is it?
Moose hunting is near over.
Nearly over.
The elephant season starting.
It's starting. Okay. The Canadian elephant. And then what's the other drill doing?
The other drill is going to drill the extension. If you go back to the spring 2021, there was an extension that was identified over at Gladiator at depth to the east. So that's where we're going to be drilling this winter. The extension at depth.
Okay.
That can be drilled from the land.
And what's that going to give you? What's the winter season going to give you in terms of meters drilled? I know it's different types of drilling, but give me a sense of what that looks like.
It's Gladiator alone is going to be about, I would say, 3,000 to 4,000 meter per month that we're going to continue drilling throughout the winter. On the Barry side, of course, we're drilling the extension of the pit shell. So that's a gimme. And currently we have one drill drilling the, I would say, the extension of Windfall, Golden Bear. Cisco identified a new zone 1 kilometer north of Windfall. Mm-hmm. Well, it's the trend, there's a deformation corridor that comes to us. So we're drilling there. It's called Panache South. So we have a drill crew over there testing targets.
Okay, so on this race, you announced it. Have you closed it yet?
It's coming very soon. Expect some news very shortly. Things are moving along pretty good. You're going to see, I I invite the people to watch our corporate presentation after the financing. So you'll see who participated just by the percentage movement on the capital structure, like on the major shareholders. You'll see there's some usual people coming back and some are really, really interesting to see back.
Okay, so it's mainly institutional raise, was this?
Oh, it's all institutional.
All institutional. Okay, so it was a flow through. The ask was 10 million. Are you raising 10 million or are you getting more?
A little bit over.
A little bit over. Okay. So imminent news, look out for it and look out for who actually came in on that private placement. Fine. Got to talk about the mill. Okay. You previously announced that you're going for the permit for this 2,400 ton per day mill. Where is that?
Okay. So we got site visit from the Ministry of Environment at the end of September. So usually they're at that phase when they're looking for the last series of questions. So they come to site, they look. So it's when they come to site, that means it's near the end. So things are progressing very well. Actually, the mill permit it's going so well that it's not on the critical path. The critical path is advancing engineering and geology. I'm not going to begin mining on inferred ounces. We're going to do infill drilling. We're going to convert them. But Barry's ready. Barry on the permitting side is ready. Moroy on the permitting side needs a feasibility, so the mining lease. So once we have the permit, I go for the mining lease at Moroy, and then it won't take very long that you can start producing. Gladiator, we need to go on the ground, develop a decline. Gladiator is going to be a few years behind the first two. But also, you got to look at where do we fit that Barry open pit in this? That's another curveball.
So just on the mill, because there were lots of questions sent in around the mill, and good questions as well. Timing's everything. You got to place these orders. Some of them are long lead items, right? Some of them not so much, and you've got to time that with the constraints of what your balance sheet looks like, what your intent is, your plan is. Okay, and I think one of the better questions sent in was around: are you looking to position yourself as some sort of takeover target to be able to utilize someone else's balance sheet to pay for things like the mill at whatever size that may look like, 2,400 or more or less, depending on how you're coming at it, or can you make strides and be in control of this yourself? Are you in control of your own destiny, or are you looking out for someone else to give you a helping hand?
We're fortunate we have assets. So we have both options in front of us. Any potential acquirer wants to acquire a nicely painted house. No one wants to come and acquire a piece of land. They're looking for the building. They want to be as near as possible to production. Of course, the acquirer wants to have it at the lowest cost possible. If I was them, I would be doing the same. So, but for us, how we do it, Bonterra, is we continue to de-risk for potential acquirers. So that means acquiring permits, continue drilling, expanding the resource. But also, you don't want to be at the mercy of, having a potential acquirer. And we have the financial backing of investors that believe both scenarios are available. So we have the capacity to build ourselves. So you go that route. And of course, if someone comes in the meantime and makes an offer to our shareholder, of course, it will be presented to the shareholder. And for the shareholder, what they want is the maximum value. So closer you go to production, or even if you are in production, you look at historical acquisition, you always get a higher premium per ounces if you're producing, that if let's say if you only have resource or a PEA or a pre-feas, the value of your ounces increase as you go in production. So there is an incentive to go there, but you need the financial support, and we have the financial support. We have Wexford, of course. We have Kirkland Lake Gold. We have Fidelity. We have the Caisse de Dépôt, Ruffer, cap. So we have a lot of institutional shareholders that believe in the camp, and that mill's an asset is built, and it will, it gives you all kinds of scenario, like the mill itself. Once we complete the feasibility, and then we say let's go and mine. On day one, you don't need to invest 400 million in surface infrastructure. The mill's there. And underground mining doesn't start at 6,000 tons a day. There's a ramp up. So actually, you can even use the existing mill at 800 tons a day to process your material from the mines, because the mines are not producing on day one at 2,400 tons a day or even 1,600 tons a day. It's a slow ramp up. It's underground mining. It's an open pit.
So you're saying you can sort of piecemeal it, or what is it? Could it be a modular solution whilst it ramps up? I mean, is that what you're saying?
Yeah, that's a scenario.
Okay.
You could say, okay, we're gonna slowly ramp up the mill and the capex as we get more ounces through that mill. Or you could say, let's bite the bullet and invest all up front and start all three assets all at once. We have both scenarios. Now you got to look at risk, one versus the other, So that's when I say we're looking at all the scenario to make sure we're going on the right trail. That's what I mean.
Okay, so what are we looking at for next? Okay, because it was going to be, we did talk previously about PA maybe this side of Christmas originally.
The target, like we're early October. The target is still Q4. So for now, but if we need to delay it, it's going to be delayed.
For the right reasons.
For the right reason, exactly.